So guys, welcome to the Millionaire Logistics channel for forex trading strategy, forex trading analysis, and forex trading education. And in this particular content, guys, we'll be sharing with you an effective day trading strategy to make profit off the market on a daily. I will be using the pound USD as our subject pair, guys. Okay, so if you like the idea, guys, don't forget to hit the like button, don't forget to subscribe, and don't forget to share your thoughts in the comment section as we trade forex with Millionaire Logistics. Okay, guys, so we'll be using the pound USD, guys, and for this particular content, guys, don't forget, after sharing with you the naked chart on how we analyze it and dice it right on the trading view, guys, we're also going to be using MetaTrader 4, where we've prepared a tool, the Millionaire Logistics IVT tool that we use to actually get specifics of the market and further confirmations before we take our trade on the daily. And guys, we'll be sharing with you all this for free. So guys, you have just have to be patient enough as we share all this with you. So first, we're on the pound USD, guys, and if you're looking at the chart technically, you can see that the pound USD is on a downtrend. Okay, now the pound USD is on the downtrend on the daily time frame. Okay, owing to the fact that it's trading below the moving average. Remember, guys, we shared how we use the moving average in our analysis for swing time perspective. So when the price is trading below the moving average, we assume the price to be in a downtrend, and for every touch that the price makes towards the moving average, we're looking for a rejection around this line. And if that happens, guys, guiding with some fundamentals in the market and sentimental analysis, we start analyzing the market to look for shorting opportunities. So guys, if you don't know what shorting opportunities means in the market, it simply means sell opportunities. Okay, so in first trading, guys, we have certain terminologies which we shall be sharing in our future contents, certain terminologies that will ease you in learning and adapting to the market. One of them is shorting and longing the market. And when you're shorting the market, that means you have intentions of going short. Going short means to sell. It simply means sell. And selling means you're expecting the price to fall, right? You're expecting the price to fall. So if you're holding a sell position for you to make profit off that market, the price has to fall. The price has to fall, like fall. However, on the opposite side, if you're long in the market, that means you're going long on the market. And by going long, that means you're buying the price. Okay? So guys, that's just the little terminologies we're going to be looking at here, right? Okay, so in other thing, you may have noticed some changes on the chart. So we changed the color of the sell candle to black, while the color of what the buy candle remains green. So we're using green and black here. However, guys, that's just for the trading view, because by the time we look at this chart on the MT4 platform, guys, it's going to be red and green. So red there will be connoting what sell, going short, and while the green will be connoting what buy, going long. Okay, now with all that said, guys, let's dive into the main thing. So with all these things, guys, you can as well cite what simple market structure. You can see swing to the downside, upside, just right here. See this. So this remains a low. So from here we have what? A lower high, right? And we have a lower low. We also have another what? Lower high. We have a lower low here, and then we have a lower high here to see. So from here we have the price extended here, kind of still higher than this. So this is a lower low, a lower high, sorry. This is a lower high, and the market came down, broke the structure, a lower low, and price move here. So this is just basic market structure, and this is on the daily time frame. So for long, guys, this market has been what? In a downtrend, right? Okay, so if you guys have been following our analysis on this channel, if you've been following our analysis on this channel, we actually got the market somewhere around here at some point. That should be around February, right? So we analyzed the market and we got a sell order somewhere around here. Although our profit, we just aimed here. This was where we aimed to take our profit, around here, because we expected price to break the get to this level at least before it breaks the structure. And if it were to come lower, it's none of our business, though. We made profit out there. But right here, guys, we're streamlining the experience and the knowledge and the strategy down to what day trading strategy. So should you want to be a swing trader, should you want to be a day trader, should you want to make profit off the market using our tools, our well developed and tools, Millionaire Logistics is here for you. Okay. So, and guys, remember, guys, we're giving all that for free. So, upon request, we shall have those installed on your system, clone to us. So, as we make modifications, it shall, remotely be effective on your system too and help you make profit off the Forex market. And we're not charging any of that. We're not charging for any of that. We're giving it all for free. Provided you're subscribed to our channel and you learn how to use it from our channel, which definitely is exclusive. Okay, so let's hit on this, guys. Pound USD daily time frame. This is not really what we're focusing our scope on, but on the daily time frame, you can see very well that the chart looks bearish. So, guys, to save time, we're not going to be back testing this whole price, because this, if you look at this, there's a whole lot of information here. But within 3 minutes, you've seen that we've developed an analogy that the price has been in a downtrend. Okay, so needless to say, this is exactly where we want to be. Let's see where we want to analyze. Okay, I think here will be fine, right? So, guys, remember, there's a whole lot to learn in this, because in this particular content, guys, for the pound USD, in this day trading strategy, we're not just trading hindsight. We're not guessing. It's not guesswork. We still have to do a multi-time frame analysis. Although when we're on the 15-minute start time frame, where we'll be entering our trades and managing our positions, we must have before then have a perception of where the price is going. And then with that perception in our mind, guys, we then use our Fibonacci retracement to track the market and trade accordingly. And aside that, guys, we're also going to be using some other informations. Okay, now informations which shall be broken down and explained same in this content. Okay, informations like the trading time, trading sessions, which I always hammer on the trading sessions, and I don't know why, but we'll be showing you why we focus on the trading sessions. Okay, just in this particular content. So just be patient so you learn this. Remember, it's a step-by-step process. There's no need to rush it. There's no need to jump. And it's also very important that you watch this video from time to time, or you have it downloaded and you also test the market. Okay, so we'll be using the Fibonacci tool, the Fibonacci retracement tool. That's one. We're also going to be using the advantage of what trading sessions. Okay, and the simple market structure, which we shall explain in this content also, because market structure is very dynamic. However, we're just going to be using the basics, right? We just want to make profits off the market, 30 pips, 20 pips, 40 pips within a specific and predetermined time frame and trading session, okay, within a specific period of time, right? So from here, guys, we're looking at the chart from here. So we'll be using the tool, the Fibonacci tool, guys. Okay, if we use the Fibonacci tool, now remember, guys, we're dealing market structure here. Let me leave this first. We're dealing market structure here. So we want to use our eyes, first of all, to know the low and the high, right? The low and the high. It's very important, guys. We need to know the low and the high. So for any time we want to trade the market, we're looking at what the immediate structure of the market. Because we're on the daily time frame, we're looking at the daily market structure. So on the daily structure here, what we can see is very symbolic right here. Okay, let me do this one more. So from the immediate time of the market, right, we see here this place, this confirms here, this right here is like a what? A double top. A double top, because the market came to this point, it rejected, not fully, it didn't break the structure, and it came right here again, still around this area, and rejected again, and you can see this move to the downside. So from here, this market here, we can see as what? A lower high. Why is it a lower high? Because if you look to this other side, let me clean this. Let me take this off. If you look to this downside here, we must have seen this particular this particular price information here. And this price information, I know many persons may not agree, but this price information here looks more like an inverted cup pattern to me. You can see this and you can see this. That's all. Very simple things to use and very simple way to actually look at the market. And if you look here, so all here we can see here as what? As a lower high, right? And why does it form well as a lower high? You can see a previous lower low here, and this structure was taken out. See this price break and close below it, right? So this forms what? A structure, making here a lower high, and this lower low, the previous lower low was taken out, okay, and forming this new lower low, right? And then you see price elevate to this position again, and where? Good. Forms another lower high. Now it's a lower high because preceding it, there was a lower high, a previous lower high. So a lower high here means that this high is, of course, obviously lower than what? This high. Okay. So let me just remove all this because I'm just trying to explain the concept here. And then we see price after this high here. We see price what? Come down to the downside, and what takes this here. You can see our price candles breaking and closing below. Okay, breaking and closing below. So that validates this structure here, the lower high, and price forms another what? Lower low. All right. Now, if that is true, we can see even though this high here is close to this, but invariably I did do this. I think earlier. You can see that price here is not equal to this particular level here. Is what? Is this previous low is definitely higher than this. So this is another what? Lower low. And you see price falls and break this particular structure, all the same, all the same, all the same. So it's a very simple way to look at the market. When it comes to market structure, it doesn't have to be the whole complicated stuff and all. But guys, what will blow your mind is the way we would look at the pound USD and then feel you or share with you a very much relative concept in the market, relative to real life, of course, very much relative one. And that's what this content will actually be basing on. Okay. Now, this is what I trade, and it's not hindsight. Over time, I've tried to, look at the market, and as I'm trading, making some mistakes, making profits, making losses, just, in a way that 70-30, 60-40 isn't that bad, 60% profit and 30% loss. But over time too, the losses we've tried to minimize to the barest minimum because we want to be consistently profitable in the market. That's what makes you a good trader, and that's where we're actually aimed at, and that's why we're the Millionaire Logistics channel. Okay, so we share with you what we do in the market, and it's very practical and exclusive to our trading and channel. Okay, now looking here, let me remove this. Looking here, coming to this point now, this is actually not a swing because you see price just like price is consolidating within this area. So it actually ranged, and then the price came down. We're looking at this same price level, right? This is what it is. This same price move. Okay. And here we see another move to the upside. And what we can see here is that this is a lower low, right? After this structure has been taken out, we see what? Another information here, another swing to the high side. Okay. Now, this is where we're going to look at the market. So if you want to test these things, test these structures, to get further confirmations, it's not that difficult. Just using the Fibonacci tool from one price structure to another. Now, using here as a swing high, as you can see, this is the lower high that we looked for. That we draw it down at fib level to where this should have been the end, the lower low. Okay. Sorry guys, but using the Fibonacci tool on TradingView is hectic. Okay, I got it. Okay, Now, guys, this brings us to another very important area, the Fibonacci tool. But if you don't get the full concept, it's okay. We're still going to do further content and all to where we're going to just talk about the Fibonacci tool separately alone. But that's another concept, guys. Let's just focus on getting a trading strategy right here that I want to share with you. Although it's not new and you know that. So let me zoom in a bit so we get yeah, a clearer picture of this. Okay. Now, okay. Okay, 100 here, right? 100 and 0. So remember, guys, the first thing to note is that we put this Fibonacci tool from the lower high, right? From the lower high here, right? To where? The new lower low. That's approximately what we did. And now what validates this is that this structure here was broken. This particular structure was broken. All these guys, remember, is on a daily time frame. We're just doing the same thing we're going to apply on the daily time frame to get the structures. Is the exact concept we're still going to be applying on the lower time frame to get those particular areas of reference and concentration, right? Those areas of importance, or you can call them areas of values, right? AOVs, okay? Now, when this price is here, guys, this is what we want to look at. Now, we see this swing just after this price swing, guys. We're looking at reactions. As you can see right here, there was the price consolidated a bit. Now, one other thing that is also important to take note of is basic candle informations, basic reversal patterns. That's the normal things that you know. We want to look at the hammers like this. Let me be circling them for you. Want to see things like this. This is what the bullish hammer, right? And this right here is what we call the spinning top, right? And all these candlesticks connote what? Reversal patterns in the market, reversal candlesticks. A whole lot of persons may not agree, but it is in fact true, right? When these candlesticks are found at what? At certain key areas in the market, either resistance levels or support levels, they actually bear some level of importance, and it's very important that you don't neglect them in your trading. Okay, now we see price what move to the upside, right? And then you see what this bearish pattern here. Now these two candles here, these two candles here, these two candles here, these two candles in basic price action patterns and all that, you can say this is an engulfing candle because you see a bearish candle totally engulfing a bullish candle, right? Now, if that is true, guys, what we know that is, yeah, by virtue of this particular candle, you can see that the bears are actually taking over the market. Like the bears are more in the market. When I mean bears, guys, don't get confused. Bears means what? Sellers, right? And the bulls means what? Buyers in the market. So let's say for here, like the sellers are very much in control of the price in the market. But if you want to go more advanced and all that, you can also term this as what? As an inside bar. Okay, now an inside bar means that this, you can see this bar is inside and it's engulfed by what? A mother candlestick, a mother bar. When I mean mother, guys, it's not M-U-R, no, M-O-T-H-E-R, mother, right? Okay, so leaving all that aside, very most important things in this market are where the price react to. In that's the horizontal lines, right? In the horizontal lines. Now that brings us to the very much important section of this content, and that is what? That's the lines. These lines on the Fibonacci tool, what they mean and represent. Now, from the lower high of this market structure to the lower low, guys, there are certain areas, they call them fib levels, right? Certain areas in the market, call them fib levels, okay? Where the market may seem to react. And these levels, guys, they are not just levels by lines and all that. They are levels that are being watched by institutional traders, right? Hedge funds and all that, big proprietary traders. There are levels that they also watch and expect market to react uh, within those areas, those price areas. And technically, guys, they are symbolized by what levels? You have several percentages here. Um, you have what? The 79.0, you have the 61.8, right? You have the 50 fib level, the 38.0 fib level, and the 0.00. Right here, down here, you have the minus 27%. And if we go below to the downside, you should have minus 62%. Okay. Now, these fib levels, guys, represents areas that markets are likely to react to. Okay. And when they react to those areas, okay, we get further confirmations, and we can as well take the risk of going short or going long, depending on the direction of the market and depending on the market structure and all that, and what we expect to see in the market, right? Now, without further ado, um I usually watch these particular levels. These particular levels are the levels I like to watch. For 38.008, if price reacts there, it's kind of risky, but it's a level regardless, either resistance or support level. But in this particular case study right here, you can see that we're looking for sell opportunities because the market has come down to a lower low right here, to a lower low, and we expect market to make a lower high, right, for us to sell. Okay, now because we're looking for sell opportunities, what we'll be looking at, guys, for price to reach what? A resistance level, right? And when price reaches that resistance level, we're expecting price to hit that resistance between this price range, between this lower low and what? This lower high. So we expect price to react at either of these levels. That is the key. That is the information we're working with. We're not guessing. We're waiting and expecting price to react at either of these levels. And guys, now another important thing to note is this. When price gets to this level, there's a possibility that price may actually move through to this next level and all that. That is where we use time of the day, right? We use time of the day, trading sessions, right, to actually look at the market. So, and I'm going to break that down. I'm going to break that down, guys, by the time we start using the MT4 ball. Because on the daily chart right here, you know that every day the trading sessions are from day to day, right? They are within the day. I mean, that's intraday, right? Within the day. So, and right here we're on the daily chart. So we can't really say there's a trading session here and all that because we're looking, each of these candles here represents 1 day of price action, 1 day of price movement. Okay. So for that purpose, guys, I'm just going to explain the Fibonacci level here, and then we'll delve down to a lower time frame where we'll look at how those things really work. Okay, so guys, thank you for coming this far. I think we've just wasted 20 minutes right here, but then I believe you get some value of this, and I believe you're getting some value of this, and you're also taking notes of some concepts and some things. Guys, I didn't rehearse for this, so don't expect it to be flawless. All right. So right here, where we see price react at the 38.00, it's also okay if price reacts at the 50 fib level. When price reacts at that 50 fib level, it shows that price is reacting at half below this range. However, where the price will react can be predetermined, right? We just have to watch the market within those time frames to see the particular levels we're taking our trades off. All right. So right here, after price reacts here, you see price fall to the downside. Okay. And it's possible for price to react at the 50 fib level. And when price reacts at the 61.80 or 62 fib level, that's magical. In fact, that's more like a very good retracement level to find, an opportunity to risk, right? And then the 79, within this 61 and 79 holds what we call a very perfect situation to take any trade, right? That is after you've confirmed that you're actually doing the right thing, though. Now, doing the right thing means that you're you've gotten the market structure rightly, and you've also considered the market, the trading session. Okay, so leaving here for what it is. Remember, we're looking at this is the price. We're looking at this price from the 13th. Okay, from the 13th. This is where we're looking at the price from. Okay, so let me take this off. But the major thing, the major take home here is what? The Fibonacci tool. And you've seen how we've used the Fibonacci tool from what? A lower high structure to a lower low, and we've gotten the exact price where the price reacted to. And guys, don't forget, now when we've placed this kind of analogy here, when we've placed this kind of tool here, it's not expected that we'll actually be studying the market on the daily time frame, because if we study the market on the daily time frame, guys, this is where we would have seen this move, and perhaps wanting to take profit off here. No, so we don't want to do that. So when price reaches this level, after setting this tool, we go to a lower time frame. You go to where either the 4-hour, can go to a 4-hour time frame. Now looking at the price on the 4-hour time frame, you can see a very cool thing here. Now from this point, this is the line here. From this point, you can see after price reacted here, we can then streamline this, see this level, a resistance level broken, and see how the price reacted. And just around here, we see this very big move, right? This very big move. So what we want to do now is, seeing that this is a control candle, we want to see the price at least fill to a gap somewhere around here. Could be a risk, entry, stop loss, take profit. And as price moves this way, break even somewhere, anywhere, depending on how you want to manage your trade. But you've gotten an entry that is very much realistic and very much what? Optimistic. Okay. Now, I wouldn't be doing much on the 4-hour time frame, because the 4-hour time frame and the daily time frame particularly holds almost the same information. And remember, guys, this is not a swing trading education or tutorial, right? This is not a swing trading one, specifically for day trading. Okay, so we'll be going to lower time frames and lower time frames. Okay, so let's go to the 15 minutes time frame, guys. Cool. So on the 15 minutes time frame, we have lots of price data here. Okay, we have lots of price data, right? From the 12th, okay, this is cool, and we see this price information. So what we want to do, guys, on the 15 minutes time frame, this is the segment where we divide the charts into what? The days and what? The trading sessions. Now remember, guys, I earlier mentioned that the major things we want to take cognizance of when day trading this strategy is, one, using our Fibonacci tool. Yes, we also want to get a fundamental bias, overall sentiment of the pound USD in the fundamental perspective. In virtually all our analysis, guys, there is a fundamental blueprint that guides us on how to trade the market before we start looking for technical points and that. And one of those things are the news, the data that we analyze, the COT reports, that's institutional traders reports. And we also look at the price data like the CPI, the NFP, the PPI and all that, interest rates and all those things. And also the real life data, what's happening in the case of the pound USD, you want to know what's happening in London, if there's any event or any occurrence that may likely affect what the currency, because remember, this is currency trading and we're dealing with currencies. And when dealing with currencies, we should also take cognizance of the countries that deal with these currencies, because currency is a means of exchange. And what we're doing here is price speculation. So it's very much imperative that we look at this data, we look at this news, this analysis, and because somehow they guide everyone's psychology, what to do with money, if you're to spend or you're to hold, if banks should be borrowing or banks should be holding, if consumers are spending more depending on the economy or consumers are spending less, if there are more job numbers or less job numbers, if people are being unemployed or people are gaining employment everywhere, the movement of goods and services, retail prices, retail sales, import, export, all these things put together, guys, make up what? Foreign exchange, which makes up what? The forex market globally. And this information, guys, if you don't have at least little ideas or something, you may find yourself lost on the chart. Okay. So for pound USD, technically, we've all seen that pound USD is what? Is bearish, right? But now, on the day trading perspective, guys, for intraday trading, of course, and where we're looking for little price swings, little price movements, and opportunities to make small profit off the market, you want to look at something more detailed. Okay, so that's why we're on the 15 minutes chart. And these are the things we want to consider when we're doing that, guys. We want to look at one, we're on the 15 minutes chart. We want to plot it down into what? The trading sessions, of course. Now, remember, guys, we have 3 major trading sessions in the Forex market. And I do mention this for the past 2 months. In fact, since I started sharing this strategy after trading it, and same time developing a tool, MLX IVT tool, that helps us, makes it easy for us though. We've been talking about the Asian session, right? The Tokyo session, right? And we've been talking about the London session, and we've also been talking about the New York session. However, guys, you should know that there are other trading sessions, but these are the major, because some persons, some time zones look at the Sydney, which also falls in the Asia section. Some persons go as detailed as looking at the North American time and and all that. And some persons also consider the New Zealand trading session and all that. But the major sessions here is what we want to look at, which is streamlined into what? The Asian session, the London session, guys, and also the New York session. And practically, guys, looking at the chart from Nigeria, where we're trading and where we live, where we base, we're looking at the Asian session from what? 12 midnight, right? Up to when? Up to 9 a.m., right? Up to 9 a.m. in the morning, 9 a.m. Nigerian time, guys, okay? And we're also looking at what the London session, which practically starts from our time, practically starts by 8 a.m., right? Although you look at the market, we actually look at the market 30 minutes earlier or 15 minutes earlier, so to speak, to see what the market has done, right? Before we start waiting for those time. Now, I'll tell you exactly why that time is important, okay? And then we have the New York session, guys. The New York session, we start by what? 1 p.m., 1 p.m. Nigerian time, 1 p.m. Nigerian time, and then runs through till where? 11:49, okay? 11:59 rather, and then it goes again to the Tokyo session. Now, that's practical. Now, within this section, guys, within these sections, within the Asian section, the London section, and the New York section, there's what we call what? Price overlap. There's a section they call in trading sessions overlap, okay? And this session overlap is very simple. It's a practical thing, right? There's nothing complicated about it. Now, we've just mentioned what? Asian session, the London session, and the New York session, right? Like time. This one starts now, this one ends here, this one starts again, and all that. But then, if you notice the timing from 12 a.m. Nigerian time to 9 a.m., right, where the Tokyo session starts from 12 a.m. to 9 a.m. Remember, the London session started by 8 a.m. That means it started 1 hour before what? The Tokyo session ended. Now, within that 8 a.m. to 9 a.m., what do you think is happening there? 2 sessions are open. The London session is open at 8 a.m. The Asian session still remains open at 8 a.m. until 9 a.m. Now, that time is what is expressed as what? Trading sessions overlap. And then the London session, which still open from 8 a.m. and then closes by around 4 p.m., 5 p.m. in the evening. Now, remember, guys, that within this London session, okay, the New York session opens by where? By 1 p.m. Now, within the time that the London session opened by 8 a.m., right, and then closes by 4 p.m., 5 p.m., 2 sessions are also open, the London session and the New York session. And within this period of time, guys, is also known as what? Trading sessions overlap. Now, what's the importance of trading sessions overlap, guys? Okay, now within these 2 sections, think about it. A whole lot of transactions happen. In fact, you find lots of opportunities to trade the market. It's more volatile then. And volatility, guys, in Forex means market moving, right? Sporadically. And it creates an avenue to extract some profit off the market. So as day traders, guys, that is what you want to be looking at. You want to look at that moment, that opportunity where the market will actually move more rapidly and has a potential of making you some profit within a short time. Like this that we see on the chart, like this, you can see this is as a result of price volatility. You see market moving just within 15 minutes, profits that may have been made just around here. Okay. Now, this is as a result of what volatility in the market. And that's something we want to consider too when day trading. Okay. Now, that's all about the trading session and also the day, right? Now, guys, remember that all these days, from here, this is 12. Okay, this is 12. If I'm to have another one here, I should be looking at this. This is 13. So I don't know if I can get it. Okay. Okay, let me see just here. So if we look at this market critically, you can see that from here, this is 12, and okay, from here, from this point where this line is to here, right here is 1 day of price action. Now, that's another key thing to note in when using this concept or trading strategy. You can see that from here to here represents what 1 day of price action, okay? And then while from here to, if I'm to use another line, this is 13 and this is 14, okay? So from here to here represents what another day of price. So we're going to be using this for the meantime before we start looking at professionally on MT4 trading session, okay? So this is 14th, and then we have 15 right here. Okay, so this is 15, and I think this will be 16 because this is the end of Friday. Remember, guys, this is on Saturday. This content was actually made. This is recorded on Sunday, the 18th of September 2022. Okay, and I don't know when to be publishing, but let's be hopeful. So these are the areas of price we want to look at, right? Now, this is 1 day of price action. This is another day of price action. And guys, this is also what a different day of price action. And guys, one can actually trade this market. Oh, sorry about this. Let me adjust it to. Okay. Now, having this information alone has actually streamlined the chart. So we're looking at the day, each day of the market. So let me zoom in a little. Okay. So let's see some very much interesting details in the market. Okay. Now we've actually streamlined the information we have into what days, right? The chart has been divided into what days. And now remember that the overall concept we initially had was that pound USD is in the downtrend. Okay, the pound USD is in the downtrend. But still on this same time frame, guys, we'll be making use of what the Fibonacci tool. And guys, we'll be using the trading sessions also and the simple market structure, all right? And also the time of the trade. So looking at this price here, looking at this price from this particular level, I wouldn't be putting more lines. Guys, so I don't make this whole area that we've created to be very much dramatic. I want to keep it as simple as possible, okay? So looking at the time here, 00, we can say that this all right here, this price here represents what? The Tokyo section, right up until 8. Right up until around here. So around here we have what? The London session. So from the Tokyo session, the price made what? A high, right? So this is where we'll now have what uh London session. Okay, so the London session starts here. Okay, the London session starts here. So very quick one. I think the trading view actually tells us the time in real time. So 8 o'clock here means 8 o'clock. I don't believe so. I actually don't use trading view. I don't trade on trading view. I actually trade on the MT4. And there's something about the MT4 which I keep hitting. The timing, I don't know, because of the time zone and all, the timing is a little bit sketchy. So when I see 10 a.m. on my chart, I actually refer to what 8 a.m. in real time, because the chart time seems to be 2 hours ahead of the real time. Now I'm saying this out of experiences I've had over time for a very long time now, and these are the experiences I share with everyone, right, via the channel. Okay, so that's what it is right here. So let's just take a short break, guys. We'll be right back. Okay, so we're looking at the chart again. Welcome back. We're right back here. So we just stopped at this point here, guys. Okay, so we want to use the Fibonacci tool. First off, we're highlighting the sessions right here because when you look at the trading sessions, okay, we want to be trading within the London session and where the New York section. We want to be trading within that time. And the information that the price is actually displayed on the chart in the previous section is what we'll be using to analyze the current section. Having very few things in mind. First, the market structure and the price movement from the previous day, right? And then a reference area. So from the previous day here, you can see that the price was moving what? Bullish. The price was actually bullish from the previous day. And right here, we also see that this is 12 on the day. During the Tokyo session, the price went to the upside. Okay, so we expect that the price may continue at least for some time on the what in the London session, or maybe at least there's some profit to make. There's just some profit to make there. And now this is what we do. Another thing we want to take note of what is the high and the low of that session, of a particular session, just like we did on the daily time frame, using what the Fibonacci tool to actually check what the high and low on the daily time frame, right, within from the lower low, the lower high, right, to the lower low, and we're looking for what a retracement in price. And when price retraces either to a resistance level or a support level, that may give us an opportunity to trade with some confirmation of basic price action reversal candlesticks. Okay, so that's the same thing we're going to imply. That's the same thing we're going to apply here. Sorry. Okay, so using the tool right here, the Fibonacci tool, this is the Tokyo session. Okay, it starts with, this is the low of it, and this is where the high of that section. Okay, trading view, trading view, trading view. I'm not. Okay, so let's just get some form of reference here, right? Now, okay, so right here we have it. Okay, now within the Tokyo section, you can see that the price moved to this point and came here, somewhere around here. We're looking at, I think, this point here, somewhere. So this is where we should have taken the move, and where the first movement, the first analogy is that yes, price is going to move to the upside further. And right here, when the session started, you can see that just around this level within the London session, you can see price coming back to where one of these areas, the 38% retracement level. And what it left here, it's very basic too. You can see oh, that didn't serve us well, but it's very much adjustable. We have the levels already, we've plotted that, and we're looking at here. So let me take this off. Let me take this off. It's not working. Let me do it again. So we have from here, and price simply moves up to, this is where we're looking at. This is where we're looking at. Okay. Up to this level. Okay. Okay. So we can see that the price just around here, within the London session, guys, the price came to this 38.0 level, which is a significant level to actually revere price. It's a significant area to pay attention to and reference. And you can see right here, this rejection on this same 15 minutes time frame. You can see the hammer, the bullish, where this is like a pin bar. And this is something that can actually serve as an interest or a risk to actually take. And entering this market here, you can see that someone may have made this profit, making this profit of price going here, or you see that the price went to where the minus 27 fib level, which is one of the take profit levels, the minus 27 fib level. But we shall discuss that in future content on how to take profits in the market, okay? For day trading, of course. So on the next day, guys, on the next day, I think I'll take this off right here. And that's the profit I may have made on that day. So on the next day, guys, this is what we want to see. Now, all this move was what? Done in the morning within the London session, right? This move was in the morning within the London session. And right here, you see this move somewhere around here. This is the Tokyo session. And then the London session started quite here. See where the London session started on the upside. Resistance level, and we see this very much impulsive move to the downside. Now, this is a very important thing to take note of. When you see price move this way, let me use this. When we see this kind of move in price, most of the times, 99% of the times, the price actually comes to refill these areas. You see something like a move this way before price further comes down. Why? Because this in the Forex market is seen as what? A market gap. No. This is not a market gap, rather. This is what is called price imbalance in the market. Now, the analogy behind this is that institutions actually create this type of price. Why? Because you find huge orders, just some orders, or the news, with the news and all that, and you find movement, you find price volumes entering the market in the downside, and it actually comes up. Now, there's something that usually happens, that because this is a price imbalance, there's a tendency that institutions will actually take the price to the upside to put in other orders to fill in the market some more, right? To put in other orders in the direction of the trend. So most times when I see these kind of moves in the market, I have them as reference. I just have it at the back of my mind that, hey, price is going to fill this level to a reasonable extent. And I just don't get that too. I use my Fibonacci tool. So maybe within this point, there may not have been a trading opportunity to actually take, because if I miss this kind of move, I'm expecting to take a buy move to fill the price. So here's what I do in this kind of cases, guys. I use my Fibonacci tool to mark from the high of this day, right, to where the low of the day this time around, right? Right here. May not be that perfect, but okay. So we have something. All right, from the highest point of the day, right, to the lowest point of the day. And then I start to hunt the market. Now what? I'm just looking for simple things. I want to take my trade in the opposite direction against the trend to where either of these levels, 38.0, 50.0, 61, or 79. And let's see how the market reacted. very well right here. If you look, you can see that price hit toward the 38.0 level the next day. Now, how did this happen, guys? Look at the chart again. We see price the next day, price come here, price come in here. And what we can see, if maybe I was conscious at this point right here, take this little profit here, but I've seen that price has refilled that level, and seeing rejections here on the daily time frame shows that this price is actually filled where to the 38.0 level, and that's what there is for me. So from this 38.0 level, guys, looking at, we're using this reference now, the previous day price action, this price gap, to now continue riding in the direction of the trend once more. So on this particular day, guys, seeing that this level has been hit right here, the 38.0, this is the level you want to trade off as a resistance level. And then you can see how price moved to the end of the day. All right. Now let's take this off, taking this off, and then intraday trading. Okay. Now the price has hit that level and it has come down. That is just what it is here. If you want to intraday, if you want to day trade this, the intraday, you want to day trade this, you can't neglect this price movement here. This price movement. So whatever analogy we're trading with the fact that this price is not moving to the upside completely. Rather, it has somewhere that it will react to and possibly stop. Okay. So that serves the note for that day. And right from here, still in the direction of the trend, how do we mark this? Very simple. Now we're looking at the highest point. This is the trend. Now we know that it's moving in the downside, and we're looking at what opportunities that will make this market go further to the downside. Why? In the direction of the trend. We've seen price feel the market is coming from the upside and is falling to the downside. So it remains in a downtrend the next day. And we have this. This is the highest point of that day, and we're looking for an opportunity somewhere around here. Right? We're looking for an opportunity here to trade the market short. We use our Fibonacci tool, and this is somewhere this around here. The timing, I don't know if it's the same, but I'm not very familiar with trading. I don't trade live on the trading view. I actually do my trading on the MT4. Okay, so looking at the chart here, this is exactly what it is. Using the same Fibonacci tool, we want to look at the range and 0.00, and we're looking at the so right here, then at this point, guys, let's just do the rest on the MT4. Okay, so let's dive onto charts on the MT4, where you'll be getting help with what? With R2. Okay, so okay, guys, so we're right here on the MT4 trading, right? MT4, and we will be looking at the same thing on the meta day, on the MetaTrader 4. Okay, and just right here, guys, we have some tools that will help you, and like I told you, these tools were developed by us, and for the benefit of our trading, of course, and for the benefit of our loyal subscribers. And also, you can actually get this for free, guys. You can actually get this for free, provided you know how to use it. You can use it yourself. You can get this particular tool for free on request. Okay, so if you're subscribed to the channel and you watch this content, guys, if you've seen to this particular point, guys, you can make a request on getting this tool, and we'll have it installed on your PC, and we'll actually teach you how to use it. And I mean, with the videos and all, it's quite easy to understand and trade with. Okay, now just the same things that we've highlighted in on the MT4 on the trading view section of the tutorial. The same things are just here, just have the same things. But right here we have our tools that form our analysis and trading and all that. We've been able to develop all this. So these are supply and demand zones. These are smart money concept zones, and this is what you have on the MT4, the period separators And this tool here also helps us to tell the specific trading sessions and all of that without we having to look at the charts over and over again, right? So during that back test, I think this is where we saw that drop in price. If we use our Fibonacci tool to plot from the high to the low of the day, you can very much see how price reacted around the 38.0 level around here. So from this point, this was where we saw the market, and this was where we were trading off, right after this move. This is the London session, beginning of London session, 9:45, 10 a.m. So within here to here, we can see some potentials of taking the market. See, cool, 70 pips off, because we have in mind that, hey, this is a price gap like we established. This is, sorry, I keep calling this a price gap. Sorry guys, this is not a price gap. This is price imbalance, right? You have this when institutions want to move the price rapidly in their favor, and most times they actually head back somewhere to fill this price. Sometimes it gets filled up to the origin of the price. It gets filled up to this point, but normally what we expect is price to get filled to either this level, the 38.0, the 50.0, the 61.8, or the 79. Somewhere within these areas, we want to expect the price to be filled, and then we can somehow see reasons to actually move in the direction of the trend, or we can make profits even before it gets to that trend. That's when you're trading counter trends, okay? Now, looking at the chart, what we see here is very much simple. If you can see this, it's beautiful. It's very beautiful. Okay, so looking at the intraday trading perspective, let me take this off. I think this is what I'm very much familiar with. Okay, so, and then we see, I don't want to talk much about this move. We see where we made some profit. You can make some profit off here too as well. But the best I got, this was where I traded. I like this area very much. And from the next day, you can see that the market has been coming downwards. Simple market structure, price has made a high to this point, which you see here, and the price is making its way to the downside, forming what? Higher highs and higher lows, right? Lower highs and lower lows. So we want to be in the trend that will push the market further to the downside. So without wasting much time, guys, you see this particular moves here. You see how it's plotted, very beautiful. It's plotted just for you and for us too as well. So the trading sessions that we talk about, you can see right here, the Tokyo session from this point to this point, the London session from this point to this point, plotted, well plotted. And guys, we can share all this with you, right? On request. So this is actually what we've, by virtue of our analysis and all that, we've developed a tool that I've developed, and altogether we call it the MLX IVT, and the trading session tool, right, that we use to plot the market. Okay, so let's wrap things up. Let's just dice easy analysis, easy trading opportunities that we get to see in the market, and we take the risk and take advantage of. Okay, so from here you can see that this is a Tokyo session. Okay, so let me say I get into the market here. I'm expecting a sell because I've seen this price plotted here, and the market actually coming to the downside. The Tokyo itself made a downward move, right? And looking at the Fibonacci tool, what do you see? The confirmation after we've plotted the Fibonacci tool from the high to the low, right? From the high to the low, right? You can see that after here we see some movement to the upside. So this is our higher what? Very key things to know. This is our what? Our lower high, and this is right here. This is our lower low. Now, if that is true, we can see price making a what? A lower high here. That is what? Lower than this previous high, just like we did with the daily time frame. Okay, and right here, guys, it coincides with what? The London trading session. Let me take this off. The London trading session, just around where? Between the 61.8 fib level and the 79 fib level. And guys, the beautiful part of this is just to get further confirmations, you're going to see this zone plotted here, obviously. And right here, this marks a trading opportunity to take off the market. Somewhere anywhere around here. But now, key thing is we're trading within what? The London session that is open here, right? And the New York session. And you can see all here, there's profit to actually make off this market. Entering the market here to here, this is 20 pips. This is what? 34 pips. And if you leave the market right here, this is about 49, 50 pips off the market. Easy for that day. And then with the assumption too that the market is still making that same move, this was the one I caught. This was the move I caught. So the market was still coming downwards, and if you use this, the previous day high and the previous day low from the price, this is where we'll come right here. Now the price did not get up to the 38.0 fib level, right? Because it fell further. If we use this, the price did actually not get to the 38.0 fib level, which is fine. I mean, which is okay. Now this is on a Friday. Now what we see here is, guys, this is very simple, but this is a very cool spot. What happened was I woke up earlier in time and I just opened my system and saw this, so I decided to take the risk of this move, seeing that this has plotted, and this was in fact a Tokyo section. I was expecting because there was a reference area. If you check, let me think I omitted that. There is a reference area. This is a reference area. This level here. After all this move, price making higher highs. Let me draw this. Price making higher highs, right? Higher lows, higher highs, higher lows, higher highs, right? And then we see some form of price, very rapid price movement to the upside, and then price breaking the structure to the downside. Mostly I want to see price coming down here to target this same area. So this was actually a reference point for me. So that was exactly how I traded the market. And then I looked at this. Using that, guys, I woke up quite early in the morning and I saw this move that, hey, price came here first. Price went to this upside, formed this, and somewhere around here, seeing this, I had to set a 30 pip stop loss here, and about a 1-to-1. I just set my take profit around here, and it was hit even before the morning, right? Even before I started like my normal trading time, the target was hit. However, guys, that's not all. There's something that we want to learn here. Though I didn't take the trade, I didn't take that particular one. But if we look closer, guys, if we look closer, within this London session and the New York session, there's in fact a trading opportunity too. Right here, you see this is like SMC. This is a demand zone that has been plotted automatically through our development of R2 and some certain parameters that we put, very complex parameters though, that we put into cognizance, and it's just to help us trade easier and also help people who are learning forex trading with us, as well. So we want to make profit. That's the goal though. That's the goal. So from the highest point, guys, from the highest point here, if we actually plot this to the downside, we want to have specific targets in mind. We want to target where the 38, we also want to target the 50, and we also want to target the 61 and the 79.0. And you can see price from the highest point to the lowest point before the London session, okay? And with the London session here, you see price move to the upside. And now this is the New York session. This is the key, the important part. The New York session is right here, and then we see price coming down to where? To this supply, to the demand zone, rather, to the demand zone. And then you see these reactions in price. So guys, my risk here will be taking this price up from here to where? Targeting the 38.0 right here, which would have given me what? 21 pips profit within this time frame. This 16.00 within 2 p.m. 2 p.m. Just few minutes, few hours, 1 hour per se, I would have made 22 pips If I target here, though I didn't take the trade, I was very much comfortable with this particular move here, and then this trade would have been a wrap. So if I had maybe closed some partials here and all that, maybe targeted 30 or 61, I would have gotten up here. And at this is the beginning of the New York session, and within the New York session, we also saw this price move, which I will not be interested in. So till Monday, guys. So for Monday, as always, guys, we're still mid-month, and from every indication, guys, from the fundamental perspective, I'm still expecting pound USD to continue just a little bit to the downside. So I'll be expecting price to maybe get up to this point, depending on how it moves on Monday, but still come further to the downside. Okay, I'm expecting prices will still come further to the downside, but that's what we'll find out in next week's trading session. So guys, if you love this idea and if you've actually gotten some value off this trading tutorial, forex trading strategy that we've shared, don't forget to hit the like button, and don't forget to subscribe to the channel. It comes with its own benefits, okay? Because we'll be sharing with you our trading tool like we promised, and it's all for free, guys. It's all for free. So if you love the idea, guys, don't forget to subscribe to the channel, and don't forget to share your thoughts in the comment section. Thank you and much love. Thank you.